Thanks very much, Nzinga. Your market news now. Asian stocks mostly edged higher Friday as investors digested results from American tech powerhouses. Amazon beat earnings forecast by a decent stretch. Its net profit in the second quarter jumped 12-fold to $2.5 billion on the back of gains made from its rapid global expansion. Tokyo closed up on a weaker yen. The Nikkei share average rose by 0.5%. Hong Kong shares barely moved. The Hang Seng index there rising by 0.03%. Over in China, the Shanghai Composite Index closed down 0.3%. In the United States, Facebook shares plunged close on 19% yesterday, dragging the Nasdaq down by more than 1%. However, industrial stocks rose after the US and EU announced that they would negotiate on trade, averting a trade war between the two. The Dow Jones Industrial Average rose 0.45%. The S&P 500 lost 0.3%, while the Nasdaq Composite Index dropped 1.01%. All right, let's take a look at the indicators. All right, so I'm joined by Warwick Lucas. He's from Galileo Capital. Thanks very much for joining us, sir, as always.
My pleasure.
Good stuff. So global markets seemingly in risk-on mode at the moment, and the all-share index is no exception. What's informing the market today?
Okay, so I think a little bit of a rebound generally coming through on the back of a choppy 6 months. It's really been dominated by trade discussions, and as we saw there in the headlines a little earlier there, at least some positive noises between Europe and the US. So that's hopefully one trade war that we can keep off the radar. I think it's trade is generally the environment that matters in the rest of the year ahead, and will basically form the basis for how markets trade. I think it's important that we perhaps take a step back and say, well, why has there been all of this discussion around trade war, and what are the interests driving it? I think one of the mistakes that a lot of political pundits and observers make when they look at someone like a President Trump and say, well, just because he's the personality, they don't appreciate that they use that as a basis to form an opinion. The key issue is this, that basically manufacturing now forms about 11% of global GDP. More notably, and as far as the US goes, IT, information technology, basically forms about 8 to 9% of global GDP. Moreover, it is growing at 2.5 times the speed of the rest of the global economy. So, you know, we're looking in the next decade ahead, what are going to be the major two drivers? And one of them will be the emerging dominance of information technology as probably the most important economic sector. And the second point will be the emergence of China as certainly the biggest economy on a purchasing power parity basis, and possibly on overall GDP as well. So these two key factors explain why President Trump was quite happy to say, fine, we will throw tariffs onto all $500 billion of our GDP. So it's front and center. It is the most important factor driving. It also explains why Trump is prepared to literally play any card in these negotiations. And I think as soon as counterparties understand that, the sooner they will actually get to grips with negotiations that actually achieve something.
Well, let's see how the game plays out. And then Facebook, I mean, you've touched on it. You've said that IT is going to be the most important, one of the most important sectors. And Facebook is part of the tech family, the FANG. But it dropped by nearly 20% yesterday. I mean, what was the big scare?
Yeah, I mean, okay, so the curious thing was how hard it rebounded after its initial hiatus in April, when in fact Zuckerberg had been warning that growth would perhaps slow down. It had a lot of compliance issues to deal with, a lot of trust issues generally in the broader marketplace. So in the meantime, I mean, we had a massive rebound there of about 20%. Heaven knows where anyone thought that was justified, and it basically gave all of that back up in this latest results. I mean, part of it relates to the fact that it really had negligible growth in North America and Europe, and those are, first of all, the biggest markets, but also the highest earning markets by a very, very long way. So I think that's booked the market a little bit there. I think the reality is that that Facebook has to re-engineer some of the activities that go through its platform. I mean, it has got an extremely strong platform, but it has to use it properly to really generate real growth going forward. And I think the market perhaps getting a little overworked that's not able to come through. I think the fact that the business had to pull in towards itself really stopped it from making some of the necessary evolutions that were required.
And then let's take a look at the mining counters. They're having an extremely good day today. I think they were up nearly 3% earlier in the session. What's changed? Is the dollar weaker? Is that why?
No, certainly not anything that I could see there specifically. Certainly looking in the last week, I mean, the dollar has really been quite firm. I mean, it's continued the trend that's prevailed in the last certainly 3 months, 6 months of being stronger. We can see it in the gold price. So the rand is actually a bit of an anomaly there, and perhaps some confidence coming back through on the demand line that looking further out than immediate noise, that maybe the trade issues can get resolved.
It's yesterday's news, but Anglo-American is quite an important counter on the JSE. They came out with their interim results, and very key, they announced that they're going to be spending over $5 billion in Peru. What did you think of their results? And quite interesting that they're very much shifting their investment into other places other than South Africa.
I think it more relates to the minerals that they actually have in their portfolio. I mean, in terms of their exposures to platinum and diamonds and so on, they are relatively fully exposed anyway. So in terms of finding decent copper projects, you cannot find them in South Africa. So they're going to have to look outside that geography. And I think copper, as far as Anglo goes, is absolutely strategic. So it makes sense. All right.
We're going to leave it there. Warwick, thank you very much for your time. As always, that was Warwick Lucas. He's the Chief Investment Officer at Galileo Capital. After a short break, more business news for you.